It was U.S. Senator Elizabeth Warren who said, "Credit cards are like snakes. Handle them long enough and one will bite you." In this lesson, we're going to identify and use various entries in credit card statements, all to answer the question, what information does a credit card statement give you? Before we get into it, let's make sure we're ready for this lesson by doing warm-up number 2. Express 15% of the difference between x and y algebraically. Now, the difference between x and y is simple. That's a minus thing. But we always want this to be a positive value, so we're going to take the absolute value of that. Then we will multiply it by 15% or 0.15. Now, let's take a look at a problem that you will be able to do by the end of this lesson. Myrna is examining the summary section of her credit card statement. Myrna has checked all the entries on her bill and agrees with everything except the new balance. Determine where the error was made. The previous balance being $1,748. If we subtract 100, add 800, add $9.15, and add $19, what we actually get is $2,476.15. That means the difference between what they have and what should be there is $100. It would appear that they forgot to go ahead and add in her payments or credits. Under the Fair Credit Billing Act, Myrna must notify her creditor in writing within 60 days from this statement date on her bill. Credit cards can be used when making purchases in person, by mail, by phone, online, and more. In most situations, you get a receipt for each transaction, but it can be difficult to keep track of the transactions over the billing cycle. A billing cycle is a predetermined amount of time set by the credit card company that is used for calculating your credit card bill. This cycle can be adjusted by the company based on your creditworthiness. For example, a college student with little or no track record of being able to keep up credit card payments may initially be given a 21-day billing cycle. A seasoned credit card holder who has proven to be financially responsible may get longer as a billing cycle. Throughout your billing, the credit card company takes an accountability of your credits and debits. You may choose to get information about your account online at your convenience, or wait till the company generates that information in a form called a credit card statement at the end of your billing cycle. You should read the statement carefully and verify the charges. All credit card companies have a process through which the credit card holder can dispute errors on the statement. Jane Sharp has a flash card revolving credit. At the end of a 30-day cycle, Jane receives her flash card statement listing all of her purchases and the payments the company has received during that 30-day cycle. Jane's credit card statement is shown on the screen. Now, let's identify the various entries on a credit card statement. Locate each of the terms as I explain them on Jane's statement. The account number. Each credit card account has a unique number. The credit line is the maximum amount you can owe at any time. The available credit is the difference between the maximum amount you can owe and the actual amount you owe. The billing date is the date the bill or the statement was written. The payment due date is the date the monthly payment must be received by the creditor. Transactions is a list where purchases were made and the date. Some companies use the date posted, which indicates when the creditor received its notification of the charge and processed it. Some companies list the date of transaction, which shows when purchases were made or payments were received. Some companies list both the posted and the transaction date. Credits and debits. The debit is the amount charged to your account. The credit is a payment made to reduce your debt. Credits are identified by a negative sign or the amount in parentheses. A previous balance is any amount owed before the billing period. Payments and credits, that's the total amount received by the creditor. New purchases is the sum of purchases or debits on the current bill. A late charge is the penalty for late payment from a previous month. The finance charge is the cost of using the credit card for the current billing period if not paid in full. The new balance is the amount you currently owe. The minimum payment, this amount is the lowest payment a credit card company will accept for the current billing cycle. The average daily balance is the average amount owed per day during the billing cycle. The number of days in the billing cycle is the amount of time in days covered by that billing cycle. The monthly periodic rate is the APR divided by 12. Here we're going to learn how to read and verify entries on a credit card statement. The summary portion of Jane Sharp's credit card statement shown on the screen looks like this. Explain how the new purchase amount was determined and explain how the new balance amount was determined. The new purchase amount is the sum of the purchases which also appear as debits. This sum must equal the amount $284.45 listed on the new purchase section of the statement summary. This means when we take all of those amounts and we add them up, we get $284.45. The new balance amount is determined by using the formula that we'll give here. That is the previous balance, $150.50, minus payments, which was minus $75, plus new purchases, which was $285.45, plus the finance charges, which were $3.53, plus any loan charges, which in this case was $0. And when these are all added up, this gets us the new balance of $363.48. Now, let's check your understanding. Suppose you created a spreadsheet that models the statement summary and input the values into row 2. Let's write a spreadsheet formula to compute the new balance for cell F2. So F2 would begin with an equal sign. This is just a command prompt, and we're going to say A2 minus B2 plus C2 plus D2 plus E2. Now, if there's no entry in any cell, the spreadsheet will use zeros for the amount that it's calculating. Pascual has a credit limit of $15,000 on his credit card. His summary is on the screen. How much available credit does Pascual have? So Pascual needs to determine his new balance and then subtract that from the credit line in order to find the available balance. We know that the previous balance was $4,598.12. There was a $4,000 payment made, leaving $598.12. But then there were new purchases made of $1,368.55, giving us $1,966.67. But then there was a late charge of $20, giving us $1,986.67. And then there was a finance charge of $5.78. This gives us $1,992.45. He has a new balance of $1,992.45. Subtracting this from his credit line of $15,000 leaves him with an available credit of $13,007.55. Now let's check our understanding of this. Rhonda has a previous balance of $567.91 and made an on-time credit card payment of $567.91. She has a credit line of X dollars and made purchases totaling Y dollars. Write an algebraic expression that represents her current available credit. Well, to start with, she had a balance of $567.91 and paid that off, so we know that that is zero. Her credit line is a total of X dollars. She made a purchase of Y dollars. That means what's left over will be her available credit. Myrna is examining the summary section of her credit card statement. Myrna has checked all the entries on her bill and agrees with everything except the new balance. Determine where the error was made. The previous balance being $1,748. If we subtract 100, add 800, add $9.15, and add $19, what we actually get is $2,476.15. That means the difference between what they have and what should be there is $100. It would appear that they forgot to go ahead and add in her payments or credits. Under the Fair Credit Billing Act, Myrna must notify her creditor in writing within 60 days from this statement date on her bill. Now let's check our understanding and determine the error that was made using the following summary statement. She had a previous balance of $850 and made a $560 payment, which left her with $290 owed. Add the $300 in purchases so that she now owes $590. Add the $3 late charge, it's $593, the $4.78 finance charge, and we get $597.78. So it would appear the difference is $89.99. What mistake could have been made? Well, it appears that perhaps the payment of $560 was processed as if it was $650.